If strength coming back in the bid, it automatically tells you there's risk. And you're looking to your downside or upside to say, what is the potential risk on this? And if it gets here, I'm out. And you've effectively been able to manage your risk. Make sure I got all the questions. And I appreciate that feedback, DB. Massive research shows that and agrees that handwritten work will always provide a much deeper memory of repetitive work like this. Suggest printing 20, 30 sheets of the template and handwriting the values each day to maximize your effort. I would agree with that. I would totally agree with that. And I can't stress that enough. The only thing that I can tell you from my experience, and I've taught hundreds of traders, and I've said this before, the only difference between those that make it and those that don't is that those who make it are willing to do the things that those who don't are not willing to do. And that means take the time to understand the context. Take the time to understand where would your best risk reward opportunities be based on what buyers and sellers are already telling you. Don't listen to anybody else, but get really good at listening to buyers and sellers, and you'll be able to effectively manage your risk, identify areas of opportunity, and trade into profit. I could not stress it more. So once we have this data, go back to this. I start plugging in these numbers. There's a low volume area range, and I'll put the whole range in, 1920, 25 to 1915, down to 1915 level there. And then I'm looking lower, to see if there's anything else in terms of a low volume area. Now, I want to be really clear about this. There is a low volume area, a little harder to see on this chart, but there's a low volume area right at 1910. Right there, 1910. What I'm looking for is a low volume area that not only is a low volume area, but is relatively holding price on one side or the other. So I can see as price tested up, it came back down. It came through a couple of ticks here. It came through even more here to the top of IB and came back down. And then when price fired above it, it held to the upside. So what I'm looking for, and I need to make this really, really clear, is I'm not only just looking at low volume areas, I'm looking at price action, and I'm looking to see if the price action confirms that it was a fair or unfair price. When price is below it, did it act like an unfair high? Meaning, did price come off of it? Yep. Price extended a little bit, but came right back down. Once price got through, did it act like an unfair low to buyers? Meaning buyers got engaged? Yep. So this area right here at 1910 is one that I want to mark. 1910. Right there. Does that make sense? Okay. Why do you think the VPOC is printed at 2675? The visual of the volume looks to be at 2375. My VPOC is a yellow line, and it's right there at 2675. And my visual, actually, if I put my line, my vertical line up against this, I can look straight down, and there is no higher volume area. That's it right there. There's no higher volume area than that at 2675. So, and again, the other thing is I trust the software. The software hasn't failed me, so it does a good job of, but I can physically see that that's the highest point of the day, most volume right there. So when we're calculating low volume areas, like this 2450, I'll go back up to 2450 right here. One of the things I want to see in this, and I will tell you that this move to the downside and the close below 2450, I can see unfair high, unfair high, unfair high, pop through. See this bar right here? 2450, unfair low, pop back up, then finally came through. So 2450 on Friday was it was a valid low volume area. However, it's going to be a number that's going to be in my trade plan. depending upon where price opens. It's going to be one that I'm going to pay attention to on Monday. The reason is because the most recent activity I have between these buyers and sellers told me that this was an unfair price, and they even acted that way. If I go back into the print and look, I'll look at this number 2450. I can see it here in the structure chart. I'll see strength coming back into the bid, strength coming back into the bid. I can see the momentum dot right here. They took price through, comes back down. What I'm likely here to see is weakness at the offer, weakness at the bid, strength at the offer, bring it back up to a new high. And then at the end of the day, I'm going to look at that, I'm going to go back and I'm going to look specifically at the auction as it came down through 24.75 or 24.50. So again, I look not only at the low volume level, I'm looking to verify that buyers and sellers in fact saw it as an unfair price. Meaning when price is below, was it an unfair high at some point? Yes. Was it an unfair low? Yes. So what that means is if I have a low volume area on the day, and price, it's still a low volume area, but price is just flying through it, back and forth, I am giving less weight to that low volume area than one that shows that it was an actual unfair high and low by buyers and sellers. I want to be really clear about that. It's a very specific distinction, because I'll have days like this one. This is, you can see right here. Let me open this up a little bit more. See this low volume area right here at 1906.75? This is really, really close to a, in fact, if I bring it down, let me see if I can find that chart. Yeah, right here. Look, this is a longer term volume profile. Look where this level is, right here, 1907. You could actually make a case for 1906.75 right there, right? So what this is telling us, and this is another example of this message I gave you, if you look at this volume right here, in the morning, VPOC was sitting at 1906. The long-term volume profile showed a long-term low volume area at 1906.75. And whenever, this is a general rule of thumb for me, and I have learned the hard way to objectively just sit on my hands when this happens. When I have an intraday high volume area that is sitting within 3 or 4 ticks of a longer term low volume area, I'm expecting there's a battle going on. There's a battle going on, and whoever wins this battle is likely going to win the day. So you can see this high volume area, this low volume area, right, and it's sitting right on top of a composite or a longer term low volume area. I mean, look at this thing. And there were a couple of cases where price opened, came down to it, bounced, gave us activity to the upside, then came straight through. Came straight through the upside, came back down, came up, bounced off of it, came down again. I'm not putting, for this day, I'm not putting any stock into that low volume area, because price is not proving. Buyers and sellers, even though it's a low volume area on the day, buyers and sellers are not proving that this is either an unfair high or an unfair low. Okay? So what I won't do on this chart, it's a low volume area, but it didn't act like a low volume area. So I'm not putting it on my daily chart. It'll be on my long-term chart, but not my daily. So once I've got my daily chart done, and I've got low volume, make sure I've got my low volume areas above. I've got this 2450 marked. The other thing you could do, I mean, theoretically, not even theoretically, literally this was a low volume area, 2850. You could put 2850 up there. I'm really trying to pay attention to those areas where it actually auctioned through. This looks a little less finished to me up here. But anyway, you could do that, but I typically don't. So these are the numbers for the day. Now, when I look at midterm and, hang on a second. We'll probably go another, I'm almost done. Probably go another half hour and and then get through the trade plan, and we'll be done for recording. So what I do then is I start popping in these midterm, long-term. Now, for the sake um, of midterm versus long-term, I've talked about this last week. What I'm looking at are these swings. So from 8/1 to Friday, end of 8/8 is a midterm chart. I really care about this activity because this is high, low, low, high. I care about this activity all the way up to about 37. So this may be another profile that I draw, right? And let me just show you how to do this. So what I'm going to do is I'm going to draw a separate profile right where this crosses underneath here from this price on through where we're at. And what I'm looking to see is, does this line up with everything else? Yep, that's a low volume area, high volume area, low volume area. Good, good. And I can put these numbers in my midterm. Right? I can call this last week a midterm chart. I can call this a long-term chart. Now, if price starts dropping below, 18, I would say if price starts dropping below, man, if it stays below, I'm sorry, if it ever starts getting below 92, 1892, and if it starts staying below 1892, we're going to have to look at a lot more data for a longer term chart, because we're going to have to go all the way back to April and May to get that data. But price has been up here, so these are our charts. Again, all I'm doing is looking to confirm these numbers are the same. So all I'm doing is taking this chart and I'm plugging in these numbers. Okay, high volume, I'm marking them high volume, low volume, high volume, low volume. So if I look here, this is 17. You'll see this, and I need to drop this. You'll see 17, 1725. I need to drop this down. So what I'll do is I will just, and I'll copy this, and I'll paste it back down here. And then typically what I'll do is just, these haven't changed, so I'll copy and paste these below. And same thing with this. I just need to put this, now that the close is above 17, I need to put that above. So again, everything is based on the close, because this is going to be kind of the center of my looking at the profile and using the close. Is going to start to become the center of my trade plan. So I do that. I make sure, for example, this is all good. 2450, 3375. These high volume areas are good. These need to come down, and long term, I'm looking at 2375, 3375. So I'm going to change this, get rid of this one. And I want to make sure that I go even higher. So beyond that, I have 52. There's one here at 48.75, and I can see price dancing around it. So I'm going to put 48.75 and then 52.75. Well, I guess I can only. Now I only go up a few. You can make more rows if you want to. But here's the point: is I want to try to understand where my high volume areas and my low volume areas are above and below close. It should be 48.75 too. And so here, basically right now, this should be the same. There we go. Those are all the same. And when we get into an area where, we're back down 18, 17, 1600s, there is years of data that'll come into play for long term. But right now, long term, midterm are relatively the same. So I'm looking for areas of confluence, specifically with the day. So if I can see on Friday, 2375, right up here, high volume area, and then 2675, what I'm going to do is I'm going to say 2375 to 2450. Now, what that does for me is it says this is where I am looking based on the context of the long term and Friday's prices. My expectation right now is that we're going to get volume in this range. Doesn't mean that we will, but this starts to set an expectation for me. If we don't, if price opens up here and volume starts growing down here, that immediately tells me something is different. Something is different from what happened on Friday. And that may cause me to start looking lower for prices, depending upon what happens with the IB and so forth. Or at the very least, it's going to make me look at my trade plan. And for example, if I have a trade that says go long at 15 and the print identifies that, and I have a low volume area that has some confluence around that, I'm going to go long at that level. So again, if something is different than what this is telling me, these convergence, these confluence levels, I'm going to start looking at my plan, looking at the day. What is this thing really trying to do? If price opens up and we get volume between 2375, 2450, possibly even higher, then what that's telling me is Friday, okay, we're getting acceptance higher. Buyers may not get much through 28, but if they do, where am I going to start looking? Where am I going to start looking for price to go? What's going to be if I get volume higher and acceptance, what I want to know is where is price most likely to go? And in order to get that, I'm going to go back to my volume profile, the longer term volume profile, and identify where my high volume areas are or where my low volume areas are. So above this level, I'm going to start looking at this 30, looking for price to go up to 30. So if I get acceptance up around this area, I'm expecting a test to 30 where I might look for a short. So now that I have all this data, now I can go back to my trading plan, and the first thing I do is I give a commentary for Friday. And this is my read on Friday. And this is what starts my trade plan. Just close this up here a little bit. And this is how I translate turn all the data into a trade plan. So on Friday, very large range. And I tell myself the story. I would keep the question after adding the last 5 days volume profile. Would you still keep 675 as the LVN? I would keep an LVN at 7, right around 7. It's right between 7.25 and 675. I think if you have it at 1907, you're going to be in good shape. That's where I would put it, because the print is really going to tell you where to get in that area. Yep, you're welcome. So I'm looking at the day, and this is the other thing I told you about, which is volume. Volume was about 300,000 less than the day before. So very large range for the day to the upside. And you don't have to get specific. Was it 23 points in all? 24.5 points in all. So that's great. That tells me we got a lot of buying, closed higher in the upper part of value, with VPOC, excuse me, with VPOC at 26.75. Help if I put a 9 there. So that's all great, right? Very obvious. So what about this story? What about this day? The day opened with two-sided trading. And what I want to make note of is with a high volume area within 3 ticks of the composite LVA at 1907. Now, if it looks like I'm just narrating the day and it's easy to do that, then good. You're seeing exactly what I want you to. It's easy to do this. Now we also have IB marked, right? And we can see once price got through IB, it moved higher. So I'm going to say, what I'm going to say about that is significant, if I can spell it, significant range extension to the upside. So what I'm doing is I'm making a case that says, man, buyers were in control. They were really strong on Friday, really strong on Friday, all the way through the day. So significant range extension to the upside with, again, price closing higher. Now, there's a couple of aha here for me, a couple of things that I'm very interested in, which is, number one, as price closed for the day, it dropped back down and closed, I gotta open this up a little more. It closed lower. It closed below VPOC, and it closed right in the bottom middle of this upper distribution area. So what I'm going to say is there was selling to close the day, to finish the day, and that inherently tells me that all of this buying, there was some skittishness here as they bailed out of their contracts to close the day. This wasn't all of a sudden sellers stepping in at the end of the day and pushing price down. This was these buyers getting cold feet at the end of the day. The other thing, also, there was about 300,000 contracts, less contracts traded on the day. So then what I'm going to do is I'm going to say the low volume area of 1910. Well, actually, I'm going to talk to this a little bit more. I'm going to start up here since this is where we are. 2450. Of 1924.50 proved to be an effective low volume area until the end of the day, where buyers relented and price came through. That's important for me because remember, that's the last sentiment of the RTH session on Friday. And some of it may have to do with the end of the week, et cetera, but I need to mark it. So 2450 did prove to be a decent LVA for me for the market, and I want to pay attention to that. Next, there was this range of 20 and a quarter down through 15 where there was weak market structure. So as price moved higher, there was weak structure, market structure between, again, sorry, 20 and a quarter and 15. weak market structure between 19.15 and 20 and a quarter. If price moves below 19.20 and a quarter,